So if you're starting a business, is it okay to pay for the startup expenses with your personal bank account, your personal credit card, instead of with business accounts? The answer to this question is yes, it's okay. What choice do you really have? Because typically you can't really open a business bank account or get a business line of credit or business credit card until you've actually registered that business. So typically when you want to go open a business bank account and you go to the bank, they're going to ask you for proof of business registration or proof of incorporation in order to, set up that bank account tied to that business name or that separate legal entity in the case of a corporation. And you can't get that certificate of registration or certificate of incorporation or proof of incorporation until you actually pay to do that. So there really is not really an option. So yes, it is okay. If you are starting that business and you're buying, some supplies, some software, you pay to get the name reservation, you pay to register the business or to incorporate the business, or you go to a lawyer to help you get that set up, or a business consultant like myself. Yes, you're gonna have to pay for that. And yes, you're going to have to pay out of personal bank accounts. And then once that's set up, then you can go open the business bank account, the business credit card, and start paying for future expenses for the business through those rather than through personal bank accounts or credit cards or lines of credit or anything like that. Now, just to add to that, how do you document that if you paid for, the incorporation or the initial business license or name reservation or registration using a personal credit card or personal bank account? Well, first you want to save those receipts. You want to document that. And then how you deal with that from an administrative standpoint, a tax standpoint, a bookkeeping standpoint, depends on the legal structure of the business. So if you're starting your business as a sole proprietorship, you're registering a business name, you're getting a business license, and you pay for those expenses out of your personal bank account or personal credit card, that's fine. Again, there's no choice. All you really want to do there is do some bookkeeping for those. Make sure you've documented those expenses and that you claim those on your personal taxes, at the end of the tax year. Because for a sole proprietorship, the income of the business is the income of the individual. The expenses of the business are the expenses of the individual as well. There's no legal separation there or separation when it comes to taxes. So it doesn't really matter which accounts you're paying your business expenses with. Even if you never open a business bank account, you still want to record those in your bookkeeping for your personal taxes for the business section. I do think it is smart to open a business bank account, even if you have a sole proprietorship, just to keep things separate from your personal transactions. And you'll likely even need one in the event that, a client is writing you a check made out to a business name. If you've registered a business name, then you want a business bank account tied to that business name so that it can recognize those checks and actually deposit them. Now, in the case of a corporation, this is a little bit different story. So if you've incorporated and you've paid for the incorporation on, your personal credit card and the name reservation and a few other expenses on your personal credit card, yes, you still want to keep those receipts. You want to document them. You want to do your bookkeeping. However, one extra thing that you want to do is pay yourself back, because a corporation is a separate legal entity. It's kind of like creating a new human. So that new human, or that new legal entity rather, should be paying you, the human individual, back. So if your total startup costs that you paid on your personal credit card were $2,000, the corporation, once it has a bank account set up and money in the bank account, should write you out a check or transfer money in the amount of $2,000 in that case, broken down by expenses, just to show that the corporation on its books and its bank account has paid those expenses that it's reimbursing to you. Those aren't your costs anymore. Those don't go on your taxes. Those go on the taxes and the books of the corporation. So hopefully that makes sense. You kind of have to look at a corporation as if it's another person, as if it's a friend or a family member where you made some expenses for them and then they're going to pay you back once they're set up and able to do that. So hopefully this video was useful. If so, please click like and feel free to check out my YouTube channel, where I currently have over 190 videos that cover business management and business startup topics. And if you're looking for some assistance with starting your business, getting it off to the right start, or improving the way you manage your business, feel free to reach out and book a free 1-hour consultation with myself, and I will leave a link to do that in the video description below.